We still got that spotlight on earnings season. Uber actually missed on profits. Advanced Micro also saw some pressure. And of course, software. There's a cloud over that sector. We're joined by Nancy Daoud, private wealth advisor at Ameriprise Financial. Nancy, thanks very much indeed for joining us.
Thank you.
Start off with these software stocks. Adobe down again in the pre-market after a nasty sell-off yesterday. And we saw stocks like Thomson Reuters. It does look as though people are worried that these AI tools will reduce the need for traditional software.
We had a very strong month of January, and we all say, as January goes, so does the rest of the year. And it's true that there has been some pressure on technology, but that's very much expected. We are in the very, very first wave of this AI boom. We've got a ways to go, and we still don't know what the outcomes will be, but it looks pretty positive so far. So with that, we expect 2026 to be very similar to 2025 with a lot of the ups and downs, but ultimately up. That's the technology story. If you're in technology stocks, stay the course, and it's going to be a little bit of a ride. It may not be a decade, but it certainly won't be weeks or months. We're still in the very first wave of all of this.
What earnings so far in the U.S. seem pretty strong this season?
That is true. The story is all about earnings. 75% of companies reported better than expected earnings. So that we can't get better than that. And the underlying fundamentals are very, very strong. I think that earnings will continue to be the spotlight for what we project in the future, because ultimately that is the deal. The profit and loss statement is the deal when it comes to stocks. So I'm glad that that is the focus now versus all this other extraneous stuff that ultimately doesn't matter.
Yeah, it's interesting. Earnings and, by extension, dividends are really what are the reason to own equities.
That's absolutely correct. And we are very much pro overweighting on value stocks, large cap value, mid cap value. Those dividends will help offset a lot of that volatility that's expected, as it did last year. So this would be a good way to just to mitigate the roller coaster ride that could happen with technology.
I'm not sure if you mentioned this yet, but banks. We are getting deregulation from the administration of President Trump. And would you favor the big money center banks right now?
Oh, yes. Financials are very much in favor. We haven't really gotten the big effect of the OBBB yet, which is just beginning. And I think financials are positioned to do very, very well, mainly because of the deregulation that you just mentioned. And this is always a very big good news for financial stocks.
We've had 3 years of double-digit returns for investors. Is it too much to hope for another strong year in 2026?
Well, I've been around for a very, very long time, in 4 decades. And there may be some turbulence along the way, but the trend is always up. So there's never an end to the up market. You just have to stay the course during those turbulent times. But ultimately, yes, I think we still have a great deal more upside. Like I said, we're still at the very, very beginning of this AI boom. And it'll have some challenges, and there will be some turbulence, but ultimately the trend will be up. So if you're not in it, get in. And if you're in it, stay the course and make sure you have a good appetite for risk and volatility.
Is there a risk, do you think, that foreign investors will pull back from the U.S. market, though, because of the unpredictability of the current administration?
Well, I always say keep politics out of your investment portfolio, because ultimately that, regardless of what which administration is in office, it's ultimately all about balance sheets and earnings. And in the end, even with Western Europe, money will talk.
It is interesting, yeah. But I mean, I know it does touch on politics, but I wonder if foreign investors do think, well, we just don't know which way Washington is going to jump these days. Will they cut their allocations to US stocks?
Well, we really, again, this is so unpredictable, and there will always be statements made, reactions, but then ultimately things fall into place, and that's actually been the pattern of this administration. There's some very big announcement made that causes a great deal of controversy and emotion. And then, a few days, sometimes even overnight or a week later, everything reverts to the mean again because now we've got some real conversations going on and some negotiations taking place. So at first it was shocking, but now it's become sort of the norm with the administration. So it's what's expected.
Mm-hmm. And just leave us with a final thought. When you talk to clients, what's the number one thing on their mind these days, Nancy?
Well, I would say managing expectations, because human behavior, people tend to think, well, we've had, as you said before, 3 years of double-digit returns. Now that becomes sort of like that's what's expected. And I think that it's really important to manage expectations, especially appetite for risk, and be cognizant of what your goals are, and more importantly, what the time frame of your goals are. So if you have near-term goals that you need to use your money for, that's probably a good time to take it off the table and out of the market, because we don't know what the short term brings. Longer term perspectives are great, but in the short term, if you need cash or if there are income needs, they are consistently and should be accounted for now while the going's good.
Nancy, thank you very much indeed. Really appreciate it. And Nancy Daoud.
Thank you for having me.
Private Wealth Advisor at Ameriprise Financial.